Well, it appears as though Trichet is certainly looking to leave a legacy in terms of his time at the ECB. And certainly what we're seeing at the moment is a lot of speculative buying in the euro. And one always would suggest that if we do see this speculative buying, at some point we could see a reprieve. So at this point of time, it is looking strong. Technically speaking, the euro is looking quite strong, but it certainly is looking like that we are due for a reprieve, and we won't have any more information yet in terms of what the ECB is looking to do until next month. But importantly, this information that we get from ECB members is critical, but at this point we do believe that the euro is somewhat overvalued.
Jim, would you agree with that we could see some sort of reprieve, that there is a bit of an overvaluation in terms of the euro? Because it all seems to be based on the speculation of an imminent rate rise in the European Union.
Well, certainly Trichet's comments last week fueled that last leg up towards that 1.4 level that we saw on Friday night. What's interesting to note is the use of the words that he used. He said it was possible, not probable, but possible. So there is a chance that we don't get a move in April as the market's pricing in at the moment, and then we would see a pullback in the Euro-US. But having said that, it's still very well supported on the dips at the moment, and even with all this risk aversion play that's going on, that Euro's still looking quite strong, and those dips around that 137 to 138 are probably likely to be met with some support till we get through that ECB meeting next month.
Jim, is there still any degree of surprise that we're likely to see interest rate movements higher out of the Eurozone before you see anything out of the US?
Not necessarily. I mean, the US has embarked on that QE2 program only late last year, and that they're likely to see that through till June. So, especially with the employment outlook in the US, which has been mentioned by the Fed being quite negative still and being in a long-term recovery phase, it's not really too much of a surprise. It is a surprise that we're not seeing a move from the UK or Canada before we see Europe or the US for that matter.
Chris, in terms of what we saw in terms of some of the US dollar action, particularly after we got the non-farm payroll numbers, look, a good number, good to see a 2-year low in terms of unemployment. But reading some comments from traders, they were a little disappointed, not quite the blockbuster number they'd hoped. We saw a little bit of weakness for the US dollar.
Yeah, well, whispers through the market suggested that we may very well see something to the upside of estimates of that 190,000 figure. Looking at the data, it appears to be reasonably strong. It's what the official estimates expected, and of course we were hoping for something a little bit significantly north of that, and that was going to be the critical juncture for the US dollar to, I suppose, allow the US dollar to have a slightly upward reprieve and begin to gain some ground after being in the doldrums for so long. So on the back of that announcement, it was quite volatile. We did see the US dollar make a mild advance, and then from there it was handed over to all the other currencies. We saw the euro continue to strengthen, and of course sterling and the Aussie dollar was fairly buoyant after that as well. So all in all, this was not the critical juncture expected, by myself included. I thought we may very well see something significantly north of estimates, and that in turn would push that US dollar up considerably.
In terms, Chris, of what we've seen, I suppose, the last couple of weeks in terms of the greenback, particularly with the price rises we've seen in oil, many people would have thought, I suppose, if you look at the traditional action of the US dollar, that you'd see more movement in the US dollar upwards as a bit of a safe haven, but we haven't really seen that so much. Why is that? Is it a question mark or so forth over the US economy?
Not necessarily. If you remember when the in the European sovereign debt crisis and the like, the US dollar was seen as a major safe haven play. We are seeing safe haven channeled into other things like gold and silver, which has certainly gone from strength to strength, outperformed other metals. And of course the Swiss franc and Japanese yen, the Japanese yen to a lesser degree. But so essentially we've seen these safe haven channeled into different currencies and metals, and of course, the traditional relationship with oil and the US dollar is essentially a converse relationship, where we do see oil on a northbound trajectory. It typically sends the US dollar the other way. So I would suggest at the moment we are seeing that buoyant oil price, continue to weigh on the greenback, and by default, that's having a positive effect on the local currency.
Jim, let's talk the sterling for a moment. Big meeting in terms of the Bank of England. What are you expecting in terms of rates? We've seen a big move into sterling of late.
We have seen a big move. We saw that pound trade above 1.63 against the greenback for the first time in a long time last week, and the market is expecting the Bank of England to probably keep rates on hold on this occasion, although they do seem to be closer to pulling the trigger. Minutes from the last meeting showed that the bank was split three ways and kept rates on hold, and inflation sitting at twice the Bank of England's band or target is a problem. They have spoken about it. There seems to be a little bit of a split, as I said, at the moment through the Bank of England. It's not likely we'll get a move this time round, although watch for the wording that accompanies the announcement to be a little bit more hawkish than what we've seen in the past.
Jim, is the big conundrum for the Bank of England the fact that you do have inflation, as you say, twice the target and rising, versus the fact that they're in deep austerity measure mode at the moment because they don't have any economic growth?
Yeah, it's true. We've seen some fiscal policy adjustments of late, which are starting to have some effect, but inflation still continues to climb, and that is the main mandate for the central bank. So they are in a conundrum. It is a difficult decision for them. Will an interest rate rise further slow certain parts of the economy or not is the question to be asked. And it's a similar theme, I guess, around the globe at the moment, particularly obviously with Europe also talking about raising rates, as we said.
Chris, just finally on the sterling, as we've been talking about, we've seen a fair degree of money move into it. Is it too late, or would you still be suggesting people look at it as a bit of a play?
Well, it's a very tough question, and certainly given the rate of or the speculative amount of funds that have flown into the currency, it does put it at particular a risk of reversal. If we have a look at information coming from the Bank of England, it certainly hasn't been as hawkish as that of Europe, and of course this is pretty important what's happening this week with the Bank of England rates decision. However, we won't know any more of this until the minutes come out. We won't know just if there was any more dissent. So what we're looking for is more dissent, and on the basis that the euro continues to outperform, and we are seeing the sterling remain fairly buoyant, but not to the same degree, I would suggest that there is still some more upside to be had coming from sterling. But as I mentioned, given the speculative climb, it certainly does put it at a greater risk of reversal. But all eyes on BOE this week.
Let's quickly talk the Australian dollar and some of the movements we expect and some of the pressures. Interesting to note, obviously, in terms of the US dollar cross, it got a bit of a lift against it when we got those non-farm payroll number outs. But again, I would have thought the risk appetite coming off a little bit with higher oil prices hurt it somewhat. Is it caught between a rock and a hard place at the moment, Chris? I mean, where do you see it, and is it a safe haven flow, as some people are suggesting?
Not necessarily. I believe that although that in some ways we can see some safe haven properties in the Australian currency because of the resilience of the economy, we can very well see it buoyant. If we have a look at these non-farms, yeah, we did see some US dollar weakness, and by default that pushed the Australian dollar higher, and that's been a continuing theme. So we've been able to, from a local perspective, look over some of the I suppose the detrimental parts in our economy, the floods, and it's been resilient through that crisis. But much of the buoyancy and upward momentum has come from this US dollar weakness that we've been seeing. So I don't necessarily subscribe to the theory that it is a major safe haven of currency, and of course we're seeing safe haven currencies gain the upper hand, and being the Swiss franc and of course gold and silver. So at this point we do expect the Australian dollar to remain fairly buoyant on this. And just one last point, if you have a look at one of the best barometers for the Australian dollar in 2010 was the S&P 500. That grew quite strong in 2010, as did the Australian dollar. But this year we're seeing a bit of a divide there. So we're seeing the S&P up around about 5% on year, and the Australian dollar just fractionally down. So it also tells you something about there is a change in what's driving the local unit.
Jim, would you agree it's fair to say that the Aussie dollar is no Swiss franc at the moment?
No, it's not, but there has been some decoupling, as Chris suggested there, between, I guess, risk appetite and the way the Aussie dollar's been trading. It has held up extremely well in a risk-off environment, and I think that goes to show that the market's now somewhat more confident in the stability of the local economy. Initially, there was probably some scepticism, particularly from global investors, looking south, thinking, well, will this remarkable story continue? Will commodities fall off their perch and China slow down, and how will that affect the Aussie dollar? But since we've seen a relatively stable, I guess, economic environment in our area, not just in Australia but in Asia, I think that overseas investors in particular are looking at the Aussie dollar and thinking it's still quite a stable trade, and they're quite confident holding long Aussie dollar positions.